Hey traders, welcome back to Your Nifty Guy. I hope all of you are doing well. Before we start, remember this: clarity comes to those who show up every single day. And today's expiry proved that beneath all the noise, the market left a very clear trail of intentions. In this video, we'll break down exactly what happened in today's expiry, what truly mattered in the price action, and then we'll build a clear, clean, high probability trade setup for tomorrow. If you want disciplined, price action driven market analysis every single day, hit like, subscribe to the channel if you haven't already. And now let's jump straight into the charts. Today, markets opened with a gap down, immediately saw some buying. We had planned to short the market below this particular level, but then the amount of gap up was a little big. Plus, the pullback which came in the form of initial buying was strong, right? Plus, the buying also tapped the support area once. And that was the reason I decided not to short, because for shorting, you would needed to short the markets below this particular low and around this particular point. If you would have shorted, that would have been at a very, very crucial support area, which is also a daily time frame area. And as you can see, around this particular level, market spent a lot of time ultimately at the end of the day, near the end of the day, breaking down below it, but then again giving us a closing above or inside this particular range itself. We have not got a closing below this particular range. So that was the reason I decided not to participate in this particular short trade. And being at a support zone, I was looking at some buying opportunities. And this was a good trade wherein market came all the way down. Now, this was the first hint of structure change. Now, I got a query from Siddesh again. He had actually taken a double bottom trade around here, right? So he entered at this particular level with the stop loss being around here. Now, why I did not enter at this particular break of this particular high around here is till around here, the structure was still of a higher high, higher low, right? No high or no higher high or a higher low had formed till around here. But then around here, once this pullback or this particular buying came, the structure changed around here, right? I'll just quickly show you guys what exactly do I look at? So it is not just that at a support area, if you find a little retracement and then you go buying at the break of that, right? You need the proper structure to change. So out here, this was the structure where the structure changed, right? First higher high formed, a higher low formed. And when this high was being taken out, this was the clear structure change. And this is where I had entered into the long trade. Now, unfortunately, my trade had also hit a SL. I entered at the break of this particular high in this candle. And immediately after some time, my stop loss got triggered around this level. And I took a stop loss of around 16 points in this particular trade. Now, took this particular trade in lower quantities compared to what I would have taken for a trade on the short side. Reason, we are continuously seeing that the structure is biased on the shorter time frame, right? Mind it, on the higher time frame, the structure might be different. On the shorter time frame, what we can see is market is continuously coming down. Plus, we are below a area below which we were ultimately looking to short the markets. Things did not fall into the puzzle, or the puzzle did not fall into the right specs, and that was the reason we did not short it. But then, because we are also at a support area, a long trade can be taken with absolutely proper risk and reward. And once the markets came down around here, I did not wait for even a single second. I squared off my trade right around this point, and the loss was not big because of the lower quantities, right? So that is how you manage your risk. Once you're taking a trade which is against what is being printed on the tape, you take the trade with a lower quantity. So this is what it was, the first trade and the only trade that I took. Apart from that, post that again, markets were extremely uh, sideways. The momentum on the downside was coming in, then some buying was coming in around here again. Buying, some sort of buying and base formation could have been seen along with RSI divergence. So there was a lot of confusion. I was waiting for the expiry special setup, but then again the move came in much later, around post 3 p.m. At which time I do not participate. So expiry move is something which I play between 2 to 245, right? Not post 3 p.m. So this was the only single trade for me today. One trade, one stop loss trade. And just a second, guys. I'll quickly. Yes. So I hope the logic of how I identify the structure change and why this particular pullback did not matter to me. This particular small pullback at which the break of which Siddesh had actually taken the trade was because I consider this to be one move with smaller green candles in between, right? This is a meaningful pullback because out here the structure had also clearly changed. And then with after this pullback, a higher low had formed, and this was my entry, right? Everything was logical, and of course, things might take a U-turn, but you gotta take what you gotta take once you're prepared for something. So that was it about today's expiry. Let me know in the comments how was the expiry for you guys. What trades did you take, and overall, how was the experience of trading today's expiry? If you can just put it down in the comments, that would be great. Now, for tomorrow, there are a couple of things that we need to take care of. Right now, we don't need this particular level for tomorrow. We don't need this because we have not got a closing, right? On this is the daily time frame, right? And this is the daily time frame fib. And because we have not got a closing, I'll still be keeping this level on my charts, right? Below this, of course, we are absolutely short. So we'll keep the plan of action again extremely, extremely simple. My number one plan will again be the trap setup. Not number one isn't the first thing that can actually happen. Not number one, do not confuse it with the top priority trade plan. Of course not. This is a trade which needs a lot of conditions to be fulfilled. So what we need is a favorable opening somewhere in between this zone. And then we need markets to give us a bearish candle, which gives us a good closing below this level, below today's low, basically, which shows that fresh people have entered into shorts in the market. And once the high of that candle gets taken out, that is where we enter into the trade and we do a scalp on the long side. Again, this is contra trend, so take the trade with lower quantities and keep a strict stop loss. So this is based on the trap setup, which is there, wherein people who would have created short entries, once the market moves up above that particular high of that candle, it would mean that their stop losses are being triggered, and we can plan a trade on the long side. Simple trade would be if we take a trade on if we break down below this with a pullback, we take a trade on the short side. So on a daily time frame today, what we have got is I'll quickly discuss it. So this is again the reversal candlestick, but then again uh, the high is lower than previous high, the low is lower than previous low. Plus we have got a closing which is quite much below the previous day's low, right? We've got a closing below the previous day's low. So this is a kind of a reversal candle. But then again, uh, do we get a follow through tomorrow is something that we need to see. And if we get a follow through tomorrow, that means we'll be getting a closing below this and we will be getting a closing below the fib levels as well. So that will clarify a lot of things, right? So is this just a profit booking or this is the result of the RSI divergence that we were seeing? So this is first signs of market showing fatigue, and then we might be testing some lower levels, and then based on price action, further we will be making our plan. So for tomorrow, we'll keep the plan of action very, very simple. For any long entries, I'll take the 75 minutes time frame because this is where we see a clean swing. So we'll take the high of this candle and today's low, and we'll mark the 0.5 to 0.618 zone. We'll keep our trading very, very simple, right? Around these levels, if we see any negative price action, we take a short entry. Above this is what we should take a long entry in itself, right? I believe that this is just retracement, some accumulation, and then again some sort of retracement, and we might actually take support. So there is also a good trend line coming in on the daily time frame, right? So if you observe and connect these two lows. Right, so this is a good trend line which has got three touch points. I have intentionally changed the color to green so that we identify that this is a daily time frame trend line. So market has on numerous times taken support or got a good buying from this particular trend line. So we are quite close to it, and that is the reason why I am assuming that a trap setup might be in the works tomorrow. And look how beautifully has this setup also been forming. So in case if we are closing below today's low, and we get a pullback, then we are also breaking down below this particular trend line. So that can be a good trade on the short side. And then again, the levels of higher time frame will come into picture with a good support. Now, those who follow smart money concept, there is a good order block on around here because a lot of strong buying came in from was observed from here, and this area is a good order block. So in case if we see some selling, we might be retesting these levels and then maybe continue again. So that is something will not be predicting. Like I always say, do not predict anything, but be prepared for anything. That is our motto out here. And this is something that we will follow and we'll keep it very, very simple. We'll make simple trade plans for each day and we'll follow them to the T. If something falls as per our plan, we take the trade. If no, we'll stay out of the markets. So yeah, that wraps up today's analysis and the trade plan for tomorrow. Remember, patience is the discipline that separates traders from gamblers. Stick to your levels, trust your process, and protect your capital. If you found value, drop a like, subscribe, and share this with someone who trades Nifty. See you in the next video. Let's stay prepared and stay sharp. Cheers, and thanks for tuning in, guys.